Ladies and gentlemen, good day and welcome to the Alembic Pharmaceuticals Limited Q4 and annual FY22 financial results. From the management, we have with us Mr. Pranav Amin, Managing Director, Mr. Shaunak Amin, Managing Director, Mr. R.K. Baheti, Director Finance and CFO, Mr. Mitanshu Shah, Head Finance, Mr. Jesal Shah, Head Strategy, and Mr. Ajay Kumar Desai, Senior VP Finance. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone telephone. Please note, this conference is being recorded. I now hand the conference over to Mr. R.K. Baheti, Director Finance and CFO. Thank you, and over to you, sir.
Thank you, dear friends, for joining this conference call where we are presenting our Q4 and annual results for FY22. I'm sure most of you would have received our results, but let me briefly take you through the financial numbers. Operationally, Q4 was a good quarter for us. Both India business and US generic verticals performed well, and Shaunak and Pranav will be talking about it in detail in their presentations. During the quarter, our total revenue is up by 11% to 1,416 crores. EBITDA was 164 crores. Profit before tax and profit after tax is down to 34 crores and 35 crores respectively. That's because of one-time non-recurring expense charged by Aleor. Had Aleor followed the previous year practice, APL's consolidated profit before tax would have been higher by rupees 188 crores at 222 crores, and net profit after tax would have been higher by rupees 145 crores at rupees 180 crores. EBITDA on a like-wise basis would have been rupees 286 crore, which is 20% of sales. EPS for the quarter is rupee 1.80 per share for the quarter. It would have been 9.16 on like-wise basis versus rupees 12.75 in the corresponding quarter in the previous year. During the full year 22, our total revenue was 5,306 crores. EBITDA was rupees 955 crores, which is 18% of sales. Profit before tax and profit after tax was rupees 650 crores and 546 crores respectively. EBITDA on likewise would have been 1,778 crores, which was 20% of sales. EPS for full year is 27.76 per share, rupees 35.11 on likewise basis versus rupees 60.81 in the corresponding financial year 2021. The company declared a dividend of rupees 10 per share, that is 500%, corresponding to rupees 14 per share or 700% in the previous year. As you are aware, the company acquired from Alembic Pharmaceuticals, a joint venture partner in Aleor Pharmaceuticals, the balanced 40% stake held by them in Aleor. Pursuant to said acquisition, Aleor becomes a wholly owned subsidiary of the company. Looking at the current market situations in US generic business, Aleor, the wholly owned subsidiary of company, carried out a detailed review of its intangible assets of R&D development expenses, and decided to expense out an additional rupees 188 crores in the current quarter/year. The breakup of that 188 crores is they charged off 65 crores in higher amortization expenses and the balance in various sets of R&D expenses, that is employee benefits, material costs and other expenses. Borrowings. The gross borrowing at consolidated level is 630 crores versus 500 crores in March 2021, and the company has 61 crores in cash on hand versus 285 crores in March 2021. 1. Net debt equity stands at 0.11. I will now hand over the discussion to Pranav for his presentation on international business.
Thank you, Mr. Vaidhi. The U.S. business witnessed a good quarter with sales at 75 million. This is due to a couple of reasons, such as increased market share in some products, as well as some one-time opportunities and some restocking of the distributor pipeline. This gives us confidence in the business moving forward. We also launched our first inhalation product in the U.S. market, Formoterol, in April. We continue to remain focused on the long term of the U.S. business, backed by 15 plus launches in the next year in FY23, and consolidating market share in existing products as well. As Mr. Vaidhi mentioned, Aleor is now a wholly owned subsidiary of APL. We will get full control of strategy, operations, and marketing of the entire dermaceutical portfolio, resulting into efficiencies and improvement in overall business outlook. The ex-US formulation business, as well as the API business, have both come off a very high base of last year, hence growth was muted. However, we are confident on both these verticals moving forward as well. R&D expense is 350 crores in the quarter. Ex of Aleor's revised charge-off, the Aleor, in order to compare with last year, the R&D was 162 crores, which is 11% of sales. We filed 11 ANDAs during the quarter. We also received 8 approvals in the quarter, including 3 tentative. We cumulatively have 160 ANDA approvals, including 22 tentative. We launched 1 product in the US during the quarter and 13 during the full year, and we plan to launch about 15 products in the next financial year. FDA inspection. We're working hard to address the observations issued by the FDA at our F3 injectable facility located at Karakhadi. Remediation measures are underway, and we are in touch with the FDA to move towards full compliance. In terms of the numbers, the US generics grew by 17% to 557 crores for the quarter. The ex-US generics degrew by 19% to 188 crores for the quarter, whereas the API business grew by 4% to rupees 222 crores for the quarter. I will now hand over to Shaunak to take you through the India branded business.
Yeah, so good afternoon, everybody. The India business, I think for another quarter, I think our ability to show a continued build-up in momentum in the business continues. A large part of this growth was spread over not just a narrow part of the portfolio, which had some tailwind this quarter due to the COVID breakout, but it was pretty much across the key product therapies, as well as our key focus product portfolios. And we expect this trend to continue going forward, and hopefully with some more further strategic interventions, we expect to strategically accelerate this pace of growth. If I were to come down to the growth numbers, I think the India business grew by 25% to 449 crores and by 29% to 1,926 crores in 22 on a year-to-year basis and a quarter-to-quarter basis. As per the industry, the market grew by 18% in Q4. Alembic reflected a growth of 23% in IMS, whereas the internal growth, the primary growth of sales growth is 29%. Across our key segments, both acute and specialty, we recorded a market growth. In the specialty side, the market grew by 7%, whereas internally we grew by 13%, and majority of it's driven by our key product therapeutic areas of gastroenterology, gynecology, and diabetes. At the acute level, the industry recorded a growth of 25%, whereas Alembic recorded a growth of 60% by IMS and 57% growth internally. The anti-infectives, which had a strong tailwind this quarter, the industry showed a growth of 23%, whereas Alembic internal growth was 59% and the market reflection of 75%. Cough and cold, which is the second key segment in the acute business, Industry showed a growth of 66%, whereas Alembic recorded an internal growth of 54%. Our animal healthcare continues to still grow at a very robust high double-digit pace with all our interventions, and that grew by 16% in Q4. For the financial year, the industry grew by 18%, whereas Alembic showed a growth of 29% internally. And this is spread over both acute and the chronic side of it. The PCPM for financial year 22 is at 3.58 lakhs for the business, and for the whole year, the animal healthcare grew by 26% over a high base of last year also. So that was very big positive upside for the performance. I would like to open the floor for further questions and answers, please.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity. Good evening. Question on the US, so good recovery. You mentioned 3 points. So how much of it is sustainable and how much of it is one-time and stocking related?
So, I've given a guidance. So I said earlier that I think about 55 million or so should be our base business. So I would say 55 million or so should be a base business moving forward. I still stick to that. I think apart from that, we had some stocking because we're moving distributors. So there was some, we did some stocking, a couple of weeks of extra material we supplied. And there were some one-time buy opportunities. Are they still continuing in this quarter? We'll wait till the end of the quarter.
So I was trying to understand, we had 13 launches during the year, so they would have started picking up some share. Last quarter, you did 53, and the understanding would have been that these will increase market share plus some more new launches. So, so 55 seems a very conservative number as a base business.
Yeah, I think with what's happened to us the last year and how we saw price erosions, so there's a number that I'm comfortable with, but yeah, ideally it is a conservative number, but let's see how it goes.
Okay, fair enough. And secondly, on the Aleor business, in one of the presentation slides, you have given, the with and without Aleor numbers. So Aleor is currently, despite some high single-digit launches, 0 sales. I could not understand that piece.
No, there is a sales.
Yeah, so there is a sales, Prakash, and there is a sales of 35 crores for the year actually. So maybe it's because in large millions you may not be able to see that, but there is a sales in current year.
Okay, no, I can see this slide. I don't know, there's no slide number. So it says Q4 financial.
You are referring investor presentation?
Yes. So it says 14.16 billion with and without Aleor. So both are, and impact is 0.
So because that is considering both consolidated numbers, then what we need to compare is between the standalone and console, and then you'll be able to see that. But I am giving you the figure.
Okay, so that is about 36 lakhs.
Crores.
Okay, crores. Okay. And given the cost base, that would be, I would presume it is loss-making at the moment.
Yes.
Okay, fair enough. And the second question was on the R&D side. Since now it's a part, subsidiary, what is our R&D guidance for the year?
So if you see on the R&D side, the total number of R&D, and this now, without the one-offs, this year we ended up about 640 crores one-off. 640 crores standalone Alembic R&D. Next year, guidance would be about 700 crores. That would include Aleor R&D as well. Not the one-time write-offs, but just a pure R&D of Aleor.
Okay. And with your sales moving...
We also start charging off the entire R&D as a P&L item. So we will stop this practice of capitalizing it and then amortizing it subsequently.
Yeah, fair enough. And as a percentage to sales, that number then would look lower, right? I mean,
it depends on the sales, no?
yeah. So I mean, assuming India double-digit growth and US, you are saying already recovering.
So, we don't really guide for the percentage of sales. It's an absolute amount I'm giving. So then I think, if India grows, if everything grows, then the percentage will come down.
Okay, perfect. And lastly, if you could share some broad level guidance for the India business, because we had a high base Q1 last year.
Yeah, so I think I've always maintained, I think whatever the IPM growth in a quarter, we should expect a few basis points higher than the IPM growth. Last year, okay, I'll answer in two pieces. Yes, there's a large impact of last year's April and May stocking that happened due to the COVID phenomena. I think as long as the market stays robust, I think we should be able to grow a little bit faster than the market. So that being said, azithromycin oral solid did have extremely large tailwinds in April and May of 21-22. So yeah, that would be a drag on the sales. The X of these two products, we expect the portfolio to perform pretty decently.
Oh, great. Thank you and all the best.
Thank you. The next question is from the line of Damayanti Kerai from HSBC Securities and Capital Markets. Please go ahead.
Hi, thank you for the opportunity. I just wanted to understand Allure-related costs better. So, Vaidehi sir mentioned now all R&D will be expensed. So, first, like how much of Allure R&D has been capitalized so far? And going ahead, you mentioned like R&D will move up from around 640 to 700 crore for next year. So, similarly, what kind of incremental costs we are expecting above EBITDA ex R&D due to this ownership change for Allure? So that's my first question.
So cumulatively, Allure R&D accumulated R&D expense, which was capitalized as CWIP or as intangible assets, was about 355 crores. We have expensed out 180 crore in this year, March 22. That's question one. Question two is that annual R&D expense as of now is about 50 crore, which we have charged off in 21-22 and we'll charge it off from 22-23 onwards fully.
Sir, you said 50 crore R&D will be additional coming off from FY23 per quarter, right?
That's it.
Okay. Sir, I just missed like how much you said total R&D capitalized for Allure?
350 plus crores.
350 crores. Okay. And my next question is on India business. So obviously you mentioned like traction has been very strong. So can you clarify a bit like what factors have helped us in achieving such industry-beating growth? And for FY23, what are your expectations on growth contribution from the volume growth as well as from the price increase part?
Yeah, so I think in terms of the India business, like I've been saying it now for quite a few calls, we've done significant corrections across the board in terms of our business, and it's hard for me to get into all the things we've done over the last 4 years, 5 years to get to this. But if I could just simply put it to it, I think the transitioning of the product portfolio to a more high growth profile for sure is a big one that's helped us. I think along with that, extremely robust and rigorous efforts that we put into our supply chain in the market to optimize that, and that has given us strong results. And along with that, I think a large amount of the correct manning in the business and retrenching of the right manpower, right kind of profile of manpower. I think these would be the three very macro reasons. Going forward, I think there's no guidance as such that I can give, but I think what I can say is that, whatever the market performance, I expect us to do, a certain amount of basis points significantly better than the market growth on any given quarter. And that's what we're working to at this point in time. And if over the next couple of quarters we can establish this trend line, we'll probably give a guidance at the end of the year to see if we can look at a far more higher percentage of growth over the IPM.
So just a clarity, the NLEM hike which was allowed from April 1st, that's all taken for your
So on the volume and the product, on the volume versus price growth, I think approximately, Ajay, what's the guidance that we're giving on this? Or it should be anywhere between a 70-30 split, 70 on volume and 30 on price.
Yes.
Okay, so 70% contribution from the volume growth and rest 30 from the pricing hike.
Price, yes.
Okay, so thanks. I'll get back in the queue.
Thank you. The next question is from the line of Yash Gupta from Angel One Limited. Please go ahead.
So first of all, this 35 crores of alloy business is for the complete year FY22 or for the quarter?
For the complete year.
Sorry, no, not as well. Can you please repeat, sir?
Full year.
For the full year. We have 13 launches in FY22. How much of the 17% growth is attributable to the new launches? And any thoughts on the price erosion in FY23?
So we don't give a breakup of how much of the growth came from the new launches, but strategically what Alembic does, as you know, is whenever there's a market, we slowly pick up market share. We don't get market share right away. So we gradually pick up market share in our products, and as we get more confidence, as the buyers get more confidence in our supply chain abilities, we gradually pick up share. But we don't give a breakup of from where we got it. And number two, what was the second part of the question?
Price erosion in the US now?
It's tough to say because, they're coming off a high base of last year. So I think if you look at it sequentially, I would say about, the 5-10% or something like that.
Okay. For the Indian business, sir, have we taken any price hikes in the April month related to the NLEM, and any numbers that would you like to give?
So I think at the moment we're still, we've taken certain parts of the portfolio, we've taken a price increase, but we don't expect that to play out immediately, as there is some amount of manufactured inventory that we have in our warehouses. So by the time we extinguish that inventory, it will play out maybe in a month or two in terms of price increases.
Okay, sure. Thank you, sir.
Thank you. The next question is from the line of Tarang from Old Bridge Capital. Please go ahead.
Hi, Pranav. Just a couple of questions on some key products. Read about a special settlement with the innovator. When could we see this launch happening?
For which one?
Spicer. That's it enough.
So actually, we are not disclosing products which are under settlement, but you are right. The product has been settled, and we hope to launch at the time of market formation.
And when is that likely to be?
It's not likely. We are not able to give exact date at this time because of confidentiality provisions, but it's not in the near term.
Okay, got it. Second, given that lacosamide is, it's synthesized, how's the market formation? Because I see a lot of players there. And how big could this opportunity be?
So I think it's still early days. We did launch a product, but I think it's a lot of competition, so I don't expect it to be a very large or meaningful launch for most people. But it's still early days. We're just waiting to see what happens. We picked up some shares. We haven't gone after any of the big accounts.
Got it. And the last, there's a product for which you received tentative approval in January. It's called Exene. If you could just give us a sense what's happening there in terms of litigation with the innovator.
Okay, so Votioxetine, I think in the public domain you will see that there was a litigation going on. So we generally expect, the launches to happen only after compound expiry.
Okay. Got it. Okay. Thanks.
Thank you. The next question is from the line of Vaibhav Jatia from Honesty and Integrity Investment. Please go ahead.
Yeah, thanks for the opportunity. So I have 2-3 questions from a longer term perspective. So firstly, we have been repeatedly highlighting that we have a very nimble supply chain, and whenever there are opportunities that arise due to market dislocation, we are in right position to capture that quite fast. So what exactly we have done to be in this, a good position that we are able to capture the opportunity? Like, is it like we generally have more inventory as compared to competitors, or is it like our manufacturing equipment are more flexible to quickly shift between the different kind of production? So what are exactly the 3-4 things that enables us to be in this good position?
Thanks. Yeah, I think that's one of the focus areas that we've wanted to build on for the US business, because it's an important area, we realized. And you mentioned some of them, and so a few things that we do is, and I don't know compared to the competition, but what we do internally is, if we do pick up an account share, we do carry extra inventory. We carry extra all the way starting from the API or the intermediates to the finished products. So we carry some extra inventory. We have multi-purpose plants, so it helps us to be more nimble. We try to leave some capacity idle, so that helps us scale up very fast if there's a market share build-up. And I think all the way from the front end to the back end, there's be very good communication, and everyone is aligned towards that, and that's what helps us.
Got it. And secondly, on the international US business particularly, even if we exclude the one-time benefits that we get in different forms at different point of time, even our normal international business seems to be generating a reasonable sum of money. So in spite of it being, a lot of products have been commoditized, and it is well known that there are more than 6-7 competitors for these kind of products. And in spite of that, not only you, but a couple of other competitors are also making reasonable amount of money. So why it is that still this is a reasonably attractive business, spite of more of being excluding the one-time opportunities, most of the products have been commoditized. In spite of that, they continue to earn good money. So what in your view is the reason behind that?
The reason why it's a good opportunity? It's, listen, I think that, and I've always said that one of the reasons why the US market is attractive, not just for Alembic, but for everybody else, is it's a large market, right? And while India is a very steady market and you can grow at market, or there's, like as Shaunak mentioned earlier in the call, that there's a market share growth and you have to either do, better than that or less than that, but you get restricted to that band, right? But for the US business, there's a big opportunity to add business very fast. And if you see, classic example is Alembic, and we've grown at up until last year, we were at a CAGR of 25% in a 5-year period. So you can add a lot of business, and that's why the US business is still attractive. One-time buys always help you with helping your margins, and they help up the profit. But long-term, in terms of supply, steady supply, it's a good market to be in. There has been more price erosion, as everybody else, all our peers in the market has said, so it's made it a little less attractive. But in our long-term view, it's still an interesting market, and we're still focused on it.
So, but generally, I know, nobody else gives this number, but ROC on the international business would obviously be lower than domestic, but do you think it's still in the range of, say, 15 to 20%, or it's below that?
So you are right. ROC on domestic business is very high, primarily because the investment needed for domestic business is limited, and you get a high profitability out of it. As far as international business is concerned, till, as I said, till 2021, we were making a decent ROC even on international business. 2 things has pulled down our ROC in recent time. One is in investment which we have done, which has not started contributing revenues, and the second is some profits have been chipped off. So as of now, that's as a company we are still good on ROC, particularly if we exclude the projects related CapEx because again they are still not revenue generators.
Right. So if I exclude the CWIP or the projects that are not contributed to revenue, international business still have the reasonable ROC. That's what you say in FY22 as well.
Reasonable is a state of mind. I mean, what is reasonable? There is no definition. But yes, we still have good positive ROC.
Okay, got it. Thank you, sir. That's it from us.
Yeah, thank you.
Thank you. Reminder to all the participants, to ask a question, you may please press star and 1. The next question is from the line of Ranveer Singh from Sunidhi Securities. Please go ahead.
Yeah, thanks for taking my question. Just wanted a clarity on U.S. business. So in this quarter, we had better than the normal run rate, the average run rate we had. So what was the reason that particular launch of respiratory products, that is the only contributor?
No, so as I mentioned earlier in my opening statement, that one of the reasons why the US did well is we picked up market share in our existing portfolio. So we've, and I think I've been saying it for the last 2-3 quarters, we're gradually picking up share in some of our products. So that is one reason. Number 2, there were some one-time opportunities that we saw in the US market, some short-term, so that helped kick up the sales. And third is we moved distributors in the US. So there was some inventory restocking at the distributor level. We carried some extra inventory at the distributor level to make the transition smoother.
So of that 10 to 12 million would have been in a nature of exceptional upside, right?
I wouldn't like to give a breakup because it's tough to say, but it is a little high because of all three, because part of it was increased market share and part of it one-time buys.
Okay, fine. And secondly, just on integration of Allure, what was the operating cost related to Allure in this quarter or for a year, if you can give?
So we have R&D cost of around between 40 to 50 crore rupees, and the plant is very efficient. It runs around less than 40 crore rupees.
So of that 188 crore, excluding that 65 crore is in amortization, the remaining 123 crore, of that 123 crore which is above EBITDA. So that includes...
we can take this question offline. I mean, you can call me and we'll discuss this.
Okay, sure. So just last one on another side, that on CapEx, what in FY23 we can expect?
In terms of CapEx,
So CapEx for 450 crores, that will include the pre-operative expenses for the plants.
Including pre-operative?
I said including.
Yeah, including.
Okay. Yeah, thanks a lot. That's it.
Thank you. The next question is from the line of Ashwin Agarwal from Ashmore Investments. Please go ahead.
Hi, good evening. On Allure, in response to a previous question, you said that the capitalized R&D was 355 crores, of which 180 crores has been expensed off as a one-off. Is there a plan to expense off the remaining 175 crores as well?
Yes. So as I said, actually the Allure, I mean, as of now, it still remains a separate company, though we plan to amalgamate it. They have decided to accelerate the amortization. So I believe the rest of the accumulated balance will get amortized in 23.
Okay, so 175 crores will appear as a one-off in fiscal 23.
55 crores.
Okay. And sir, obviously, this business is incurring a fairly substantial loss at this point in time, and we have a number of filings in there. Could you help us build a picture about how we should look at Allure over the next 3 to 5 years? I mean, you acquired the minority stake of 40% in this, and you're amalgamating it in the holdco. I mean, how do we think about this business from a 3 to 5 year perspective?
So, in my opinion, the best way to look at it is it's separated now. I think moving forward, it's just going to be amalgamated into Alembic, and there's not much to see, right? Because even on the R&D side, as I mentioned, the ongoing R&D costs will be about 50 crores a year. compared to about 650 crores that we have in Alembic. So it's a small fraction. We filed a bunch of products, about 30 odd products that they've got, and they'll just get amalgamated with Alembic. The plant is running quite efficiently, and so moving forward after the amalgamation, I don't think you should look at it separately. But it's just like a derm portfolio for us, because cost-wise, it's not going to be any major issue for us.
No, that's not the point. The point is that last year you had revenue of roughly about 33 crores, right?
Yeah.
Against which you had an R&D expense of about 50 crores and plant operating expenses, if I got the number right, another 30 crores or so. Correct?
So all put together was 80. So plant would be, around 30-40 crores.
30-40 crores. So, it's a straight loss of about 50 crores. Now, obviously, while it will be a division and it will be a number that will get hidden away in the big picture of things, but I just wanted to understand the rationale for acquiring the minority stake, and what do you expect this business to contribute over a period of time? And the fact that it will be small is not relevant, right? The fact is that
the rationale is it's the same as it is for the rest of the U.S. business, right? We are still excited about the U.S. business, and this is a good portfolio to have. There are some opportunities in derm as well, and I do see the sales also ramping up significantly. There's a lot of approvals that will be coming in this plant. It's cost-wise, the plant is a very efficient plant. So I think it's going with a U.S. strategy, right? That we're excited in the U.S. business, and this one too will aid to that. And sales and profit, everything will go up with this.
And if I recall right, the total capitalized value of Aleor as of 31st March 21 was of the order of 800 crores. Am I right?
Yeah, that's right.
And out of which, let's say 355 crores gets written down as R&D, so that leaves you with something like 500 crores ballpark. Would that be correct?
Yeah.
And would it be reasonable to expect that over a period of time, this 500 crores can turn out an ROC of double digits, or would that be too aggressive?
No, I think over a period of time, yes, we expect it to have a double digit ROC going forward.
Okay. All right. Thank you so much.
Thank you.
Thank you. The next question is from the line of Sayan Mukherjee from Nomura. Please go ahead.
Yeah, hi, good evening. Just, on the U.S. market, so this quarter seemed to have, created certain opportunities. So what is driving it? Is it the China-related shutdown? Why are, distributors talking more? And why are those opportunities coming back? Is there any structural shift, or this is just...
No, So, Sam, there's no structural shift per se in the market. I think for the last 3 quarters, I've been saying that with the erosion, we're looking at building up more market share in some products. So we've had that. That's one aspect of it, where we've gained market share in some products. Number 2 is there were certain one-time buy opportunities. I don't think they were China-related. It was just basic, whatever reason the market was short on these products. That was the second one. And third, as I mentioned, the distributor, I think that is more only for us because we are moving our 3PL, our third-party distributor, to a new distributor we moved on the 1st of April. Hence, we wanted to stock up some more material to ensure there's a smooth transition. So that's all. But structurally, there's no shift in the market per se. I don't think China disruption is something that we've seen so far on the formulation side in the U.S.
Okay. And the second question is, when you think such slightly long term in the U.S., you mentioned it's a market which you feel excited about, but it appears that, most of these opportunities are very much sort of one-off in nature, which is very unpredictable. So how you make, capital allocation decisions based on such sort of uncertainty?
So, I think, but what we've seen historically with the U.S. market, it moves up and down. There are opportunities always. And as I said earlier, it's like a massive market size, while the returns have come down considering what we thought initially. But we're being mindful of it. That's why if you see R&D, what I said earlier, that R&D also for next year, we're going to keep R&D flat for next year. And if you do your job well, if you remain compliant, you will get opportunities as we've seen from time to time.
Okay. And any other new areas you are looking at for the U.S. market? I know your topicals, injectables, oral solids. Anything else you want to sort of?
No, I think as of now, our hands are full with what we've got. I think our first priority is to ensure the injectable plant is compliant. So we will resubmit our response to the FDA. We're undergoing remediation right now, and we've got consultants. So that's the first aspect, because once that comes in, automatically the ophthalmic line, the regular injectables, the pre-filled syringes, the long-acting injectables, everything then kicks into play.
Okay. Okay. And just one final question from my side. On the cost front, sir, if you can just, throw some light on how the raw material, logistic, and other overhead sort of costs are trending. I just want to know where we are versus, let's say, what we had seen maybe, pre-pandemic levels, just to get a sense on, how elevated the costs are for you.
So this year the logistics have been a big hit for everyone, I guess, in the industry, because all your shipping rates, not just air, but even sea has gone up. I think we moved a lot of our shipments from air to sea, but in spite of that, we've seen a higher logistics cost. And in the question, you have a number. Do you want to throw a number on that?
Yeah, I think on material cost we are stable, so there is no significant change in last couple of quarters. I mean, pre-pandemic is a old story, so I won't even remember the number. But generally, other expenses are in line.
Yeah, I think material costs, some intermediates, some chemicals have gone up. Rest I think is okay.
Is it possible to give a number like, so many crores, let's say?
Ryan, can we take this offline, like you call me and we'll discuss the numbers?
Okay, sure.
Thanks.
Thank you. The next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, hi. Am I audible?
Yes, you are, sir.
Yeah, okay. Yeah, thanks for the follow-up. Just one question, since Aleor is loss-making and, terms are a little bit kind of getting commoditized, was there a thought process of, selling our stake rather than buying, the other stake?
To be honest, no, I don't think that. As I mentioned, I think it's an interesting market, so I didn't want to sell our stake. I think it's FDA compliant plant, approved inspected 4 times. There's a nice portfolio and it's a good basket of products, so I was quite keen to pick up the balance 40%. Yeah.
Okay, and what's the pipeline like? I mean, how many filed and how many pending?
We have total 45 products that we are working on at this point in time. There are others under consideration, but 45 on the grid. We filed 30 of that actually, and we have 17 approvals, and we have launched 11 products.
Okay, and these 7 products are currently giving us $5 million.
Yeah.
Okay. And these would be just launched, right? I mean, there is a chance of they becoming a little larger, right?
Yeah.
Hello?
Yes.
Yeah, of course.
Yes.
Okay. And secondly, on India business, since, growth is across the board and more so acute, but things will normalize. Just trying to understand, I mean, in the past we have invested or the capital allocation is higher in the export business. Having done that now, is there a, an M&A strategy for India? Any thought process there?
Yes. So on the India piece, I think on the M&A side, like I said, we keep not scouting, but we keep a check of what's going on. I think at this point in time, looking at the last valuations of the last few transactions in the India business that have happened, including the veterinary ones, I think at this point we see limited value, or rather we see limited long-term value in any M&A strategy. At this point in time, to pick up an entire portfolio, I think what we are constantly trying to do is we're trying to augment the portfolio, and I think we have certain slots in certain divisions or certain therapeutic areas where we can look at acquire a one-off brand, and those transactions are quite slow and long drawn, and success rates are very low. But yeah, we are that is what we are looking at. But as of now, I think jumping in the fray for any M&A asset that comes up in India, I think that's not something we feel is a prudent strategy for an Indian company like us.
Okay, fair enough. And last,
we will continue to invest in our organic growth. That is the idea of.
Yeah. So I think on the and the one reason why I say this is I think where we are, I think we've been able to demonstrate now. It's been quite a few quarters. We've been able to show sustainable predictability and decent growth numbers. I think there are plenty of ideas and there are plenty of things at an organic level where we want to actualize that. So I mean, from a resource allocation point, yes, we have stepped up resource allocations a little bit compared to what we were doing 2-3 years ago. But there are a lot of ideas and there's a lot of clarity in terms of what can give us this additional incremental growth in the India business over and above what we're doing at this point in time. Hopefully we can execute these in this year and some of that should start showing at the end of the year.
okay, lovely. And lastly, on was there a comment on our partnership with Ryzen? I mean, on Umralisib, where are we? What are the next steps? If you could just give us the year-end overview and going forward, how?
So no, there was no comment on it, and it's disappointing news that we saw, and maybe somebody saw that the FDA has taken a very different view towards all PI3 kinase products in the market. Hence, TG didn't, or they've volunteered out of that ODAC meeting. So what we know is in the public domain of TG, we will start discussions with them on what they see. But what we know in the public domain of TG is that they are not going to pursue oncology as much, or they're not going to pursue oncology in the future. So when talks with them, let's see how it goes. It is indeed disappointing because it is at the last leg, and FDA took this call for all PI, not for this particular product, but for all PI3 kinase inhibitors.
Yeah, and then you have the chance to go and scout for another partner, or how does these things happen?
So it's, as I said, we're in discussions with TG. So let's see what happens. But we are in talks with them. So next couple of weeks, we'll get an idea.
Okay, and is there any near-term milestone that was pending?
No, nothing was pending.
Okay, got it. Thank you and all the best.
Thank you. The next question is from the line of Bharat Celly from Equirus. Please go ahead.
Yeah, hi. Thanks for the opportunity. So, sir, just wanted to understand on the domestic market, considering our product Azithral has crossed the 450 crore mark. So, do you think going forward for at least next 1 year, our growth could be in double digit for the Indian market, or do you believe it could be less than 10% in that case, if it normalizes? Hello.
Yeah, Shaunak, go ahead.
Yeah, sorry, my connection was bad. Can you just repeat the question?
Yeah, I was asking, since our product Azithral has crossed 450 crore mark for this year, which could actually normalize going forward, considering the COVID cases as well as all the infection cases have come down drastically. So, do you believe we can grow in double digit even going forward in FY23?
Yeah, so I think this year, like I mentioned, I think with some amount of a higher base this year, I think growing at a double digit for this current year, my 22-23, I think would be a bit of a challenge. But I think going forward, I think 23 onwards, we should come back to historical growth number that we've been giving pre-COVID, which is, anywhere from a low to a mid-level double-digit growth based on market growth numbers.
Sure. And so just wanted to understand on the US part as well, considering we have got additional set of queries for the new facilities. So how do we look at US market from FY23 perspective in the absence of new plants, considering the new product approvals which we have seen is having a ticket size of around $25-30 million. So in the absence of new facilities coming through, how do we look at the US market for FY23?
There's two parts to it, right? So I think we're still going ahead launching. As I mentioned, we will launch about 15 odd products in the US in FY23. So that will help the growth as well as what we saw in Q4 that we picked up share in some existing products as well. So 15 products is pretty good, and I think we should be able to get growth on these products. In the next 6 months, 9 months, depends how long it takes with the FDA. We'll get an idea about the new facility as well. But growth will continue because we have non-injectable portfolio as well.
Right. And in just wanted to understand one part. Considering our overall, we have got a settlement for Revlimid. So when that launch is scheduled, are we going to be at the time of market formation, in the second, third wave? How it is going to be?
So if the question was on Revlimid?
Yes.
Yeah, so Revlimid, I think what's in public domain is that we are in litigation with the brand, the innovator, and that's all we can say at this stage. It's a pretty early stage in litigation, so we'll see how that progresses.
Oh, okay. So we have not yet settled it, right?
No, we have not yet settled.
Right. And last question. So you said 15 launches. Out of that, how many are going to be are going to be the ones which we had got already approval in FY22 and will be launching in FY23?
Are you talking about Alio?
No, total.
No, overall.
How many are approved and how many are yet?
Oh, I'm just saying 15 more. That's what I expect to launch, So based on some old ones. See, because there's always, we don't launch. We sometimes take some time to launch a product, and we say market formation where we wait. It's an opportunity. But we will launch 15. Some may be from this last year, some may be pending with us for a while. It depends on the situation.
Sure. That's helpful. Thank you, sir, and best of luck.
Thank you. Ladies and gentlemen, due to time constraint, this was the last question. I now hand the conference over to Mr. R.K. Baheti for his closing comments. Over to you, sir.
Yeah, thank you. There were a couple of pending questions, but I think we have some other schedule. So you can get in touch with anybody whose questions were not responded to. Can get in touch with Mitanshu or Ajay, and they'll be happy to share that information. And thank you very much, everyone, for joining this call. And it's always interesting to interact with you. And look forward to see you again next quarter. Thank you.
Thank you. Thank you, members of the management. Ladies and gentlemen, on behalf of Alembic Pharmaceuticals Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.